For coffee, I think the plan is very simple. Uh, it has kind of something to do with the larger direction of the market. So let's say on a particular day, how are we leaning long term wise? For example, let's say in the last few days, I was kind of leaning bearish. Even today, I would be leaning bearish uh, because of the situations that are going on. So obviously the expectations with respect to the Trump Lula meeting or anything that is going on in that regard with respect to weather, things are suiting coffee at the moment, even though there are some forecasts of slightly warmer weather across Brazil in the next few weeks. That should not affect the coffee prices too much. And given that being the case, we have to do daily point of view analysis. So every particular day, we'll have to see how the price is actually set up. So, for example, if we look at a particular day before, let's say, in the earlier part of the week. So what we were seeing, this is Monday. So sorry, this is Monday. So what we are seeing is the price continuing bearish since mid-September, very aggressively bearish. The price trying to go above this MA. This is 1 hour we are looking at. It's a shorter time frame market, like 6 to 8 hours market. Mm, so so we'll have to switch between different time frames and go eventually into the 5 minutes that as we spoke. But before that, we have to analyze where we are with the price, where we are going, and what we could do with respect to where the price is and what we could trade, what we can catch. Because it's all about getting getting the best returns with the least amount of risk. So in that particular case, on this Monday, when the price opened lower than this area, than this MA, and then creating these FVGs and price holding that earlier FVG, this was created on the Friday itself, and price held and fell below and created another FVG double header. So what would become a point of inflection in this case is this area. So that bottom that was created on Friday, that would become our rejection point, and that's what we get in the next few hours. So we confirm the direction of the market on that particular day. So now, if we go back to the lower time frame, what is happening is that the price is rejecting. So on the lower time frame, the price is rejecting from that price after the 1 hour close, which is around the price of around this price, which is, let's say, market. We also market where it closes, but on a dashed manner so that these are distinguishable. So on that particular Monday, we are closing around here. We have confirmed the somewhat bearish price action, and we are kind of at the opening price of the day as well. So further breakdown would mean confirmation of downside continuation. So this is the day's low, and when the price breaks down on the 5 minutes, so we don't need to go back to the 1 hour anymore. So because we have established our direction of the market, and when that breakdown happens, we can then continue with the trade based on the 5 minute, the direction, the distance from the MA and the direction, etc. At this point, maybe we will not, but if we are catching this point or higher point, that then it's relatively close. But if we don't catch that, even we catch a little later, like price trying to break out again and failing through and then entering, and then the same things happening, any of these points, if we enter, we are getting good returns on the day, on the particular day, until what happens is when something when something is successful. So on Tuesday, after all this is going on, so when is Tuesday opening? Let's move that cursor to Tuesday. So this is a new day. So till Monday, it remained bearish. Tuesday opened bearish as well, and we could stick to that. We could stick to that bearish side and try to get something, etc., etc. But we see flattening MA. So we'll probably break even or something like that. But when this larger kind of breakout happens, and it takes out the opening price of the day. Again, let's move this point. We are heading into a bullish territory, and as we know, on the longer time frame, we are not bullish. So we are not bullish, and when that bullish movement happens, we don't have the basis to long it. So we don't have that basis to long it because we are not at the support, which is here, which is here, and which is not confirmed, something not confirmed. So even if we pick that bottom, uh, we are not there. We are not. We are below the still longer time frame MA, and it's not there to short. Sorry, long. We are still in a short pattern on the longer time frame. So we'll not be trading the long side, and that's how we decide when to trade long, when to trade short, etc., etc., and why we do that. Now on the next day, so this happens, and we come to the next day. So what is happening on the next day is, let's start with that. So this is the Wednesday opening candle. So we got there, we got rejected there, and we tried to move down. So if we look at it now, on the Wednesday, what happens is the price attempted a breakout on the higher time frame and rejected there and remained bearish. So in that case, we are starting the day bearish. We're starting the day bearish, and immediately after the open, what happens is price starts to, sorry, this is not the candle. This is the candle. So price starts to push up and tries to break out, but fails through again. So this kind of situation, this is the thing that we are seeing many times, and that's the confirmation or trigger, whatever we call it, on the basis of, let's say, marking it purple so that it is visible, and so something like this. This is something we have seen on Monday as well, happening many times. So something like that happened here. Something like that happened here. Happened here. False breakouts happening all through the notion. So that would be a clean bearish signal for us, and when that happens, we could get short here and set the stop at the high level, which is not even $1.5 even with spread. It's quite good. And even if we target, like, let's say, to R, we can get $3, which is uh, about $1,500 per lot. Per lot return is very high here, so that's something that's core behind this 5 minute. So it's happening at a relatively very short period of time. So this is only the whole trade completion is only like an hour or hour and 30 minutes. So that's something that is feasible to do, that is like has momentum. We are seeing like very strong momentum throughout this price action. So now what we are doing is we are moving to the next day. So before the next day, what we want to see is the price. So this was Wednesday. This Thursday. Thursday. This is the Thursday first candle. So where we are, where are we? Is the situation that the price is too far away from the MA. We are at a resistance, and we are kind of in a no trading zone. So we are not particularly bullish because we are at the resistance of the weekly level. So this is where the weekly price opened. So if we go back, this was the opening, and that's where the price is opening on Thursday. uh, Whatever the fundamental is, that is obviously a resistance, and and we are away from the MA, but we are above the MA. So above the MA, we are not shorting. We are waiting for the price to settle down so that we can long from there. But when it comes to that level, it is again breaking down, and on the 5 minute scale. And if we look at what is happening on that particular Thursday, is price going below the MA, but we are not shorting, remember, because we are on the bullish side of the MA on the higher time frame. So this short is not particularly aligned with us again, and the long is not particularly aligned with us because it's happening on a flat trajectory. It's happening too fast, so this is a big swing and then falls again back into the this below trajectory, and it's not happening quite like that we saw before. It's not something that is similar. And today, if we go into today, what is happening is, let's say, let's go into where is Friday opening, and first see the 1 hour. So what we are seeing is that when the price closed on the Thursday, it was above the MA. It was slightly bullish, but it it was like going up. But what happened in the practicality of things is the price opened with such a big candle on the 5 minutes itself that the whole day went into consolidation. So the price just adjusted around that. There was no clear trend on the bullish side or the bearish side, and there was not a clear trend signal on the 5 minute that we have seen before. So something that is falling tries to break out and tries to then falls. If we look at something rising tries to break down and then comes back, it's not particularly happening like that. This is happening here kind of, but if we look at it, it is already at the high level of the day, which is not something we would want, and it's flat. It's not falling. It's not trendy. It's just sideways price action, and something like this does not happen today. So if we go back even, this happens quite frequently on the 5 minute scale, and that's why I mentioned it uh, on aggressive sell-offs especially. So let's say we're looking at this particular day, 18th of September. This is an aggressive sell-off starting the day, and we don't have an entry for a long period of time. Then it certainly pulls up, goes above the MA, and then pulls back. Even if we sell that point, with some certain risk, obvious there is risk, and set the stop loss above that. That's a $3 stop loss, and if we agree to that, only in the next candle we are getting 1.5 hour, which is 5 minutes. And if we hold it, if we hold it long enough, that's giving us a 5 hour plus trade, which is a $16 drop, which is around $8,000 for one single lot. So that's I think that kind of momentum is not available anywhere except the indices. That is why I wanted to share this and share this idea, especially not to trade these kind of scenarios, but to trade the like really aggressive moves, but on the really low time frame. Obviously there is going to be risk, and there are some trades that won't work and some situations that won't work. But if we can catch some of these big moves and some of these rallies, it can compensate for what is uh, um, what losses it will incur, something like that. So it is basically very simply trading the trend. So whatever the trend is, so let's say this is a sell-off trend. As soon as it went below, we are sellers. When it's above, something like this, let's say in this period between the whole month of August, we will be buyers. And if we are buyers, let's say if we go back to August, let's say the whole month of August, if we see from the start, even at the middle point when the established thing is complete, like the trend is established, if we see such things, and if we can get around it, so this again, nothing is giving us the opportunity, nothing is giving us the opportunity, nothing is giving us the opportunity to buy. But at one point we will get that opportunity, and this is where. So on this particular day, the whole day is kind of going nowhere. So let's assume on this particular day what is happening. So yeah, so it's going nowhere. It's bearish, and it suddenly gives that. It goes back above, it goes back down, and it goes back inside, which is kind of the thing that we are looking for. And when we enter, put the SL wherever we want below this, which is less than $1. If we just keep it, that's on that day on inside. I think this is now 7:45. This is 10. So inside the next 2 hours, it's literally gone a lot higher. And even if we miss that, the next opportunity is there. Breakdown and come back above. That's the trend that we want to catch. Uh, the this breakdown goes back inside, not as clean as we would want, but again, it's textbook. Goes back above, back down, back above. Textbook. Goes back down, goes back inside. It happens so frequently. Uh, like it's really very interesting. Same thing happening now. Again, same thing happening. Same thing happening. It's only bullish. We're not trading bearish even on August. So yeah, i- not every day that we get these opportunities. But when we do, I think it's a very simple and clean way to approach the market. And because it's fast, we'll know if it is working or not, and we'll not sit behind the trade that thinking about many situations, discussing many situations, what could happen, what could not happen. This is pure execution, nothing else. If it happens, we trade, and if we trade, things will happen because coffee is not something that sits around. It moves.